Ladies and gentlemen, we welcome you all to Q2 and H1 FY'25 earnings conference call of Venus Pipes and Tubes Limited, hosted by Ambit Capital. This conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on the date of this call. These statements do not guarantee the future performance of the company and may involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Dhruv Jain from Ambit Capital. Thank you, and over to you, sir.
Thank you. Hello, everyone. Welcome to Venus Pipes and Tubes Limited 2Q FY'25 earnings call. From the management side, today we have with us Mr. Arun Kothari, Managing Director, Mr. Kunal Bubna, Chief Financial Officer. Thank you, and over to you, sir, for your opening remarks.
Good evening and warm welcome to everyone on the Q2 and H1 FY'25 earnings call for Venus Pipes and Tubes Limited. I have been joined by Mr. Kunal Bubna, CFO, and SGA, our Investor Relation Advisor. We have uploaded our Q2 FY'25 investor presentation on Stock Exchange and company's website. First of all, sorry for the delay starting this call for 15 minutes. Due to some technical reason, it was delayed. And I hope you had an opportunity to go through the same. We are happy to share a strong performance for the second quarter and the first half of FY'25 in Q2. Our revenues reached rupees 228.9 crores, showing solid growth of 19.6% for the first half of the year. Our revenues stand at rupees 469.1 crore, marking an impressive growth of 26.4%. This success reflects the high demand for our products across various sectors and reinforces the trust that customers have in the quality of what we offer. The above growth is backed by robust volume growth of 30% for H1 FY'25 on year-on-year basis. We also achieved all-time high order book of rupees INR 340 crores. Our key performance monitoring the parameter remains market share gain, and we are gaining market share from day one of operation and continue to gain as reflected in our presentation. Before we discuss our operations, I am excited to share some important updates about our team. In our journey to become a global leader, we have appointed Mr. Nilanjan as our Chief Strategy Officer and Mr. Mark Light as our Business Development Officer, Energy. Mr. Nilanjan brings over 20 years of experience, having worked with companies like Tubacex, Kevlion, BGR Energy System, Terex Corporation, and Oromira Energy. He has a deep understanding of different industries, market trends, and the challenges of running complex operations. As Chief Strategy Officer, Nilanjan will guide our plan for growth using his experience in business development, operation, and market expansion. His industry knowledge and strong focus on customers' needs make him the ideal person to help Venus Pipes and Tubes grow in a sustainable way. We are also excited to have Mr. Mark Light, who joins us with over 30 years of experience in international sales and business development, especially in the oil and gas and energy sector. He has worked with well-known companies such as CW Metals, Reimer, Unit Bidwell Co., and J&K. With his knowledge of global markets and business growth, Mark will play a key role in helping Venus become a leader in the stainless steel piping market and expand into new products and markets. We have been consistently investing in manpower, which has resulted in jump in our manpower cost in the last 5 years. We believe that the substantial investment which we have done in the last few months will give us substantial capability to gain market share and profitable growth for long term. With this strong team and a clear vision for the future, we are well positioned to achieve our goals of becoming a global leader. We are excited about the road ahead and confident that our investment in these new leaders will drive Venus Pipes and Tubes to even greater success in the coming years. We have added new slides in our investor presentation, elaborating on how we have increased our market share over the years. The domestic market size has expanded from 2.2 lakh metric ton per annum to 3.2 lakhs metric ton per annum from FY22-24, and we have increased our market share from 3.7% in FY20 to 6.2% in FY24. Our success is largely driven by our capacity expansion and backward integration, which position Venus as one of the few players in the country with end-to-end production capabilities. We are confident of increasing our market share to low double digits in coming years, given our foray into fittings and value-added pipe and tubes. Now turning to our operations, Venus has delivered impressive export performance this quarter, with export revenue growing by 2.7 times despite high freight rates. Export now makes up one-third of our total revenue, which is a strong milestone for us. Let's look at the export outlook in our key region. Europe is showing encouraging sign of recovery, though the economy is still facing high inflation and reduced consumer spending. However, with the European Central Bank lowering interest rates, we expect a renewed focus on capital spending, which will open more doors for companies like ours to grow and capture a larger market share. In Europe, demand for our product is strong and our quality is on par with the European manufacturers. We are steadily expanding in this market thanks to solid relationships with dealers, active participation in the industry events, and our reputation for high quality products. Regarding United States, with the election uncertainties behind us, we anticipated China Plus One play to pick up, which could benefit us in the long term. Additionally, the Federal Reserve's rate cuts are expected to boost spending and restart capital investments. We see a huge opportunity for our welded products in the US market. To strengthen our presence, we have appointed representatives on the ground who are actively building connections with the local dealers and distributors. Regarding Middle East, while parts of the region face ongoing conflict, we are largely supplying to countries not affected by the unrest. The demand in the oil and gas sector is substantial, and we are proud to have secured approvals from several major oil and gas players in the Middle East, and we expect more approvals in the coming quarters. Overall, we are positive about our operation in this region, and we expect a strong flow of orders in the coming quarters. With the Red Sea crisis improving and freight rates returning to normal levels, we are optimistic that the growth momentum in our export business will continue. On the domestic front in India, the growth story remains strong after the recent election, and we have seen a renewed focus on public spending. Some orders were delayed due to heavy rainfall across part of the country, but demand remains solid. And we expect continued growth in our domestic business. We see a major opportunities in sectors such as oil and gas, engineering, chemical, and power, with the healthy inflow of the orders. Coming to our segment-wide performance, sales from seamless pipes showed the strong growth, increasing by 21% year-on-year for both the quarter and the first half of FY'25. Welded pipe, however, saw a slight dip of the 2% in Q2, though for H1 FY'25, sales grew by 13%. In terms of volume, growth remained robust, and with both seamless and welded pipes achieving over 30% growth in the first half. Revenues for the quarter were expected to be impacted by fluctuation in raw material prices. Looking ahead, we remain focused on expanding our value-added product portfolio. This includes offering specialized tubes such as titanium-grade tubes and fittings. We aim to cater more to critical industries where quality is paramount. We also seen a promising opportunity in the emerging sector like green hydrogen and nuclear, which align with our commitment to high quality specialized products. Our capital investment in the expansion business is progressing, with the first phase set to launch in March 2025. We are confident that this expansion will support our growth in high demand segments and reinforce our position in the market. We anticipate a strong second half of the year driven by sustained export growth and our expansion into new geographies. Our focus remains on delivering top quality stainless steel pipes and tubes tailored to meet the diverse needs of various industries and customers. We are committed to upholding the highest standards and ensuring that our product meets global benchmarks for reliability and performance. This commitment to excellence positions us well for continued growth and success in the global market. With this, I hand over to Mr. Kunal Bubna, our CFO.
Good afternoon, everyone, and a very warm welcome to our earnings conference call. We take absolute pride in announcing that your company has reported strong quarterly and half-yearly revenue, EBITDA and PAT for Q2 and H1 FY'25. Just to brief you on the revenue front, revenue from operation for Q2 FY'25 stood at rupees 228.9 crore as compared to rupees 191.4 crore during Q2 FY'24, achieving a growth of 19.6% on year-on-year basis. Revenue for H1 FY'25 stood at rupees 469.1 crore, witnessing a strong growth of 26.4%, and we have witnessed a strong volume growth of 30% across welded and seamless. Revenue bifurcation for the quarter was 33% from welded pipe and 57% from seamless, and balance from others. Growth in seamless segment was 21% on year-on-year basis, and welded segment registered a degrowth of 2% on Q2 FY'25 on year-on-year basis in terms of revenue. Our export sales stood robust at rupees 75.6 crore for the quarter compared to rupees 28.5 crore during the same period last year, a growth of 165% year-on-year basis. Gross profit for Q2 FY'25 grew by 42.6% on year-on-year basis and stood at rupees 77.6 crore. On the front of EBITDA, our EBITDA for the quarter stood at rupees 40.9 crore as compared to rupees 34.8 crore in Q2 FY'24, a growth of 17.5%. EBITDA margin for the quarter stood at 17.9%. On H1 FY'25 basis, EBITDA show a growth of 42.5%, standing at rupees 58.9 crore, with margin at 19%. On the PAT front, PAT for Q2 FY'25 is rupees 23.7 crore compared to rupees 20.3 crore in Q2 FY'24, a growth of 16.7% on year-on-year basis. Margin stood at 10.4% compared to 10.6% in Q2 FY'24. Our order book remained robust at rupees 340 crore around. In closing, we are optimistic about the journey ahead and fully committed to driving sustained growth. We are excited to push forward and elevate the Venus brand, setting new benchmark in the industry. With this, I would like to open the floor for Q&A round.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have our first question from the line of Dhananjay Bagrodia from Ask Investments. Please go ahead.
Sir, congratulations on a good set of numbers again. Wanted to ask you now, are we taking significant market share from other countries, or are we taking it from other players in our industry? How are we gaining these numbers now?
Sir, see in our business wherein operate, there are a lot of smaller and unstructured players operating in that. So over a period, we have been those small players also form a good percentage of the total industry supply. So we have been taking their percentage. And apart from that, see, our export has been also been increasing over a period. It used to be significantly low, 2%, 4% over the past many years. And in last year, it was 12%. It is now gone up to 33%. That is also a contribution coming from.
Okay. Sure. And sir, secondly, any thoughts on our inventory days? What would that end the year at?
I didn't get your question. Can you repeat?
Inventory days, what would we end the year at for working capital and inventory days?
Yeah, it is around, inventory days are around 120 days sort of.
Okay, and we'll be ending the year around the similar?
Yeah. So we intend to maintain that only.
Okay. And then lastly, another, like one of our suppliers had bought a company, a stainless steel company in NCLT for 50,000 tons for 200 crores. Is that something we had also looked at? Because that would have been way cheaper to acquire that.
See, not specific that, but as we said always, we as a company, always there is a team who keep on working on any acquisition and any sort of agreement which are available, which plan to our strategy, which are at a cheaper cost, but not this one.
Okay, fine. Sure. Thank you, sir. Congratulations again.
Thank you.
Thank you. Before we move on to the next question, a reminder to all participants, you may press star and one to ask questions. You may press star and one to ask question. The next question is from the line of Kunal Kothari from Centrum Broking. Please go ahead.
Yeah, thank you for the opportunity and congratulations for great set of numbers in challenging quarter. So my first question is, what would be our current capacity utilization that we are operating on 38,400 ton overall capacity? Can you also provide how much will be the utilization rate in seamless and as well as in welded?
Yeah, it's more than 85% on the front of seamless and around 60% on the side of welded.
Okay, sir. And by year end, at what level we are expecting to reach?
Yeah, in case of seamless, similar level like 85, 90, and more than that sort of number for seamless, and for welded it should be targeting sort of 70%.
Okay. Secondly, we were expecting the approval from companies like Aramco in the oil and gas sector. Can you state us what is the current status over there?
Yes, Kunal, with the approval process is already on for the number of companies. So for the big companies, we had already received some of the approval from the oil and gas company of the Middle East, or some of the oil and gas companies just like Aramco or others. Approval is under process.
Okay. And what timeline that you can suggest that approval can come from Aramco as well?
Hopefully, we are getting every month or every quarter, we are getting some of the approval from some of the new companies. So I believe that most of the oil and gas company, or particular what segment we are operating, what sizes we are manufacturing right now, will able to get in the period of 6 to 9 months with most of the oil and gas company. Not only Middle East, we are number of oil and gas company globally, we are in process of the approval.
Okay, sir. So also we have started, selling the products largely in the oil and gas sector from last couple of quarters. So compared to the quarter one, or we are starting maybe from quarter four onwards, how much growth that we have seen, selling in this particular area in the overall mix, and how we can see in next 6 months to 12 months?
We don't give any specific sector-wise data, but again, it's not currently double digit for oil and gas, but we believe going forward with many of the approvals coming in and again supplying to the larger player in the country also, we should be touching double digit in coming year to come.
Okay, sir. So one more question. There are some demand pockets where I believe the extrusion process is required. Are we also targeting in future to set up extrusion process to cater that part of the demand as well?
Kunal, right now we can't do any comments on this matter. Definitely we look forward for the opportunity. Whenever right time will come for winner, definitely we wish to go. But right now we are not able to give any comments in this matter, Kunal.
Okay, no, sir. Thank you so much, sir, and all the best.
Thank you. A reminder to all participants, you may press star and one to ask questions. The next question is from the line of Neha Talreja from Nuvama. Please go ahead.
Sir, congratulations on great set of numbers. Just couple of questions from my end. Firstly, if I look at your export share, I think you were aiming at about 25%. It's actually grown much significantly, I think beyond everyone's expectation. How do you see the run rate going forward? Can it become like a 40-50% share for our business, or is there any revised, growth rate that you're looking at from the exports angle?
See, definitely, yes, it has been significantly high, 33%, and see, the order book is quite heavy on the side of export, but it will be always more than 25%, what we believe for the coming quarters.
Understood. Just secondly, on your domestic market, of course, you've written that, certain orders got pushed. Is there any quantum to it that, what is the order book which would have, got pushed from, let's say, Q1 to or Q2 from Q2 to basically Q3, that would have led to, some domestic dip here?
Definitely, it's not specific from the quantum, on a specific quantum basis, but see, many of the end customer had delayed taking their material, keeping the effect of rainfall in the entire country. And again, few of the push, we have not, the export might have been slightly higher as compared to what we have achieved because of the elevated freight. So these were the two reasons which has slightly made the top line on a bit lower side.
Understood. Lastly, you have actually given your market shares this time in your presentation, which is pretty helpful. If I look at the market size from FY'23 to FY'24, especially on the seamless side, has actually not increased at all. And, you have definitely, increased volumes there and, gained market share. Any reason for market itself not growing on the seamless side on, one this particular year, FY'24?
Not as such, there is any specific reason, but we believe going forward there should be 6 to 8% growth in the market on an overall basis.
Both welded and seamless included?
Both on a total basis, yes.
Understood. Thanks a lot, and all the very best.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. The next question is from the line of Muskan Rastogi from B&K Securities. Please go ahead.
Hello, sir. Congratulations on this set of numbers. Sir, recently we have got a notification where India has implemented anti-dumping duty on welded stainless steel and pipes imported from Vietnam and Thailand. With regards to that, I have a couple of questions. In India, what is the current total stainless steel industry steel mass, and 70% is welded out of that. So can you please tell me how much is catered by imports for welded? And second part, since ADD will be implemented for 5 years, then how much of volume can we target?
Sir, unable to get you actually. The voice is getting distorted.
Okay.
Ma'am, can you please use your handset?
Yeah. Am I clear now?
Yes.
Yeah, okay. So recently we've got a notification where India has implemented anti-dumping duty on welded stainless steel pipes imported from Vietnam and Thailand. So with regards to that, I have questions. So in India, the total stainless steel industry is 3 lakh and 70% is welded out of that. So how much imports currently how much of it is catered by imports currently? And second part is that since ADD will be implemented for 5 years, then how much of volumes are we targeting?
See, for import for welded, we believe it should be in the range of more than 15 to 20%. But again, there are few of the companies which are exempted, who are overseas companies and who are exempted from these circulars. So those companies keep on exporting welded pipe to India.
Okay. So in future, how much volumes are we targeting after this anti-dumping duty comes in?
You see, we are not as such importing any welded pipe. We are importing coil on which no anti-dumping duty is there. So we are not as such affected by the circular. Definitely it helps in a way from the way the welded pipe which we used to come in the country will be coming significantly less. But again, few of the companies are exempted. We generally supply to India, so they will keep on supplying it.
All right. Okay. So we are also seeing a huge demand in the Middle East for the stainless steel welded and stainless steel seamless. So what would be the opportunity size there, and how much percentage we are exporting?
Regarding the Middle East, that almost size we cannot define, but there is a huge investment is ongoing in the Middle East or in oil and gas sector. Mostly only main supply of Middle East is getting from India or China only. Or in India also, depends on the approval of the mill. Whichever mill is approved, they procure from, because in the Middle East sector, in oil and gas sector, very limited mills are approved from India. So in Middle East, there is a, right now in demand in the water sector, in other sector also, there is a good demand, which is open for, even for the unapproved floor also. But it depends on the quality, play important part in the Middle East. So we see good opportunity in the Middle East, or we have started to penetrate our Venus Pipe presence in the last 2 to 3 quarters only. So for the coming quarters, at least for next 4 to 5 years, we are looking very good demand from the Middle East. Whatever inquiry and orders we are in hand, we are in processing all the orders, or almost number of inquiries ongoing for the Middle East. So in the coming quarter, we are expecting good volume from Middle East, but quantum we cannot define right now.
Oh, okay. And so on volume front, can you please tell how much is the year-on-year growth for welded and seamless?
It was on a blended basis, we see the growth level was around 30% year-on-year and half-yearly basis.
30% for both of them?
In fact, both of them, it was around 30%.
All right. Okay. Thank you so much.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. The next question is from the line of Sahil Rohit Sangi from Monarch Network Capital. Please go ahead.
Yeah, thank you for the opportunity. First of all, congratulations on delivering such results in difficult times, especially on exports. You've done a wonderful job. My first question is somewhat on the financials. The other income has risen substantially this quarter. So, is it purely interest income or something else?
It include a few part toward interest income, few towards export incentive, and few towards exchange fluctuation.
Okay. So, roughly half or would be?
Majorly, it was towards exchange fluctuation because we have export, so that was the income out there.
Okay. And on the other expenses also, the number looks very high. So, I mean, any one-off over here, or what's the reason for the increase?
No, it's not a one-off. Now the entire operation, like PHC, the entire mill is backward, the entire mill is backward integration, so the entire mill is running. So there is an increase in store and power and labor costs. And apart from that, as the export proportion had increased, ocean freights are high currently, and it is also increased in this quarter as compared to earlier quarters. So that is also the reason for increase in other expenses.
Okay. And thirdly, now just to understand, on the welded side, I mean, on the revenue basis, we are not seeing growth. So is this largely because the pricing has corrected, or is it because volumes also? Like, because you said there is a YY growth in volumes.
Yeah, there had been YY growth in volume. The prices had deflated on the side of welded on half-yearly on a YOY basis. But again, the quantity was more on low side for this quarter. But see, as we said, a few of the order had been forwarded to the coming quarters to come. So we believe there is a healthy order book which will help us to take the revenue on the side of welded also going forward.
And the pricing correction on the whole seems to be roughly 10%. Is this just because of the whole steel price correction, or is there any other element to it?
That is the reason. Basically, if you see on a blended basis, it is more than 5% on a blended basis, the correction. And in fact, if you see our internal estimate, the correction is around 8 to 10%. But we have forecasted in March 24.
Okay. Thank you. That's all. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. The next question is from the line of Dhruv Jain from Ambit Capital. Please go ahead.
Thank you for the opportunity. If you could just spell out what's your order book currently and what is the execution cycle that you expect that, it'll take for you to fulfill this order book?
It's around something sort of 340 crore, and we believe typically it should take roughly more than 120 days to execute the same.
Okay. And, we've seen a fairly strong execution from your end from an exports perspective, almost contributing more than 30% of your revenue. But despite that, typically what we've seen in the past is that as your export mix goes up, your margins also pick up. But, in this quarter, we've seen some softness. So just wanted some thoughts from your end on that perspective, because you've seen a very strong export growth.
Yeah, but what has happened is, right, there has been good export growth, but the last quarter there was a hefty increase on the side of ocean freights being paid on while you export the goods to various part of the world. That is risen by quite significant number. So that is slightly softened the margins. But I think we believe it should be maintainable in going forward. Those trades should also subsidize going forward, and it will help us to increase those margins.
Fair enough. And sir, one question on the market of welded and seamless. So in your presentation, you mentioned 110,000 tons for FY'23 and 24 for seamless, and for welded about 210,000 tons. So while the last 4-5 years seamless has done well, we see that, welded has not really picked up, even if you look at it from a 4-year CAGR. So just wanted your thoughts as to why is this happening, as to, why is welded not growing as fast? Is there some issue with the market? Because we've obviously seen, anti-dumping, etc., that's helped the industry, but from an absolute market growth perspective, it's been kind of on the softer side.
Yeah, basically, as you said rightly, in case of seamless and all, few of the government policies and other, and also our export team in Europe and others has really helped us to penetrate faster than what we, in fact, internally has thought. But on the side of welded, see, the approvals for larger diameters and all take a significant time. So that has taken us, and see, as a US market now also, we have started penetrating there, and also along with that, Middle East, many of the approvals had been received, and a few of the approvals are underway of receiving. So those things happens in case of welded. It was entirely new set of sizes what we were going to manufacture. In case of seamless, we were there with those many of the sizes. Only few inches we have welded in case of seamless. So we penetrated faster out there, and here because of this requisite approval and all, we have taken a bit time.
Sir, I was talking more from an industry perspective. So, I mean, if I look at welded pipes market, FY'20 it was 160,000 tons, and FY'24 it is about 210,000 tons, which basically implies, sort of a lower growth versus what seamless market has done. So, just wanted your thoughts there as to why is this market not growing as fast?
Believe me, main criteria the people are shifting the seamless, as it is the use in the critical operation, or it's the highly valued product compared to the welded pipe. So people might be migrating from the demand from welded pipe to seamless pipe, or previously the seamless pipe industry was not much present in India. So right now there is a player like Venus, there is another player also who is in market to supply the seamless pipe. So if previously the demand of the seamless pipe, the availability of the seamless pipe also limited. It was depend on the import of very few players. So people are not able to get the seamless pipe. That's why they were using the welded pipe. So people, if any industry requires anything, or they are not getting in the seamless category, then if they require to use the SS pipe, then they select the welded pipe instead of the seamless pipe. So sometimes demand is from seamless pipe to welded pipe, or welded pipe to seamless pipe. Right now there is a good availability in the Indian market for the seamless pipe. That's why seamless pipe market is growing well. That's our thought.
And sir, on the capacity front, we've seen a couple of players add capacity. Have you seen any sort of pricing issue that you've had to face, or in general with respect to industry? Because we've seen a couple of players add substantial capacity. Thank you so much.
Yes, Dhruv, definitely. It's happened, but there is a good demand in the seamless pipe. Or very good demand is coming in seamless pipe segment from the power sector in India. So in future we don't foresee much pricing competition in seamless pipe segment. because there is a demand is also growing up. Just water industry is growing up in India. But still there is for any new player, it requires the approval process to enter in the market. So they can't simply enter into the market on the specific basis of the milk. They require the long process to get the approval. So if any new industry starts the single cell production, it requires minimum gestation period of the 2 years to 3 years to get the requisite approval to apply the pipes. So there is a slightly price pressure, but there's not much price pressure we are foreseeing in future.
Great. Thank you so much, sir, and all the best.
Okay.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. The next question is from the line of Maithili Balakrishnan from Alchemy Capital. Please go ahead.
Thank you for the opportunity. Just a question on the domestic demand. You mentioned that it was but the takeoff was a little pushed out into the quarter. Has it come back to normal in October, or do you see it, but there have been rains and other factors which have also happened? So just wanted to get a sense of that.
Not as such. Our intent is more towards for the first half, or the intent was to focus to our export geography, just to penetrate out there so that indigenous and export both sides are there. We are seeing demand in the domestic market from chemical industry, which was for the last few months we are seeing those demands. So those shifts are there. Good demand is there on the side of power. We don't believe any much major challenges in the domestic industry on the demand side currently.
But has it picked up from what you saw in the first half, or is it
similar to that?
Got it. And also in terms of the capex, could you just give us an update on what is happening on the fittings as well as the better material welded tube capacities?
The same is underway, so we are working on that. Few of the machines order, few of the civil works had all been started. So the project is underway. So we believe the full target of 31st March 2025 we will be able to meet. We believe that.
Got it. Thank you. That's all from my side.
Thank you. We have our next question from the line of Kunal Kothari from Centrum Broking. Please go ahead.
Thank you for the opportunity again. We did around capex around 50 crores in first half. What will be the capex in second half? And also about the capacity expansion we are doing. Can you also state the current status, like how much has been done, and are we expecting to be complete on time, or we can do before the timeline that we have provided?
See, it should be roughly for second half in the range bound of further 100 crore of capex investment. And see, the project for both the projects are working. The civil work had been started. Few of the machines have been ordered. Few of the machines had also been received. So we believe the target of 31st March before 31st March 2025, seeing the current scenario, we believe we should be able to meet. But definitely there was a few rainfall in the last quarter, which affected a bit of civil work. But again, we believe there are 6 months to go, and we should be able to make that.
So out of 170 crore, we are doing around 150 crore in FY'25?
Oh, it would be 115 sort of number.
Because we did around 48 crore in H1.
Yeah. So the total capex for the year should be in the range of 150. Out of that, 115 would be towards this project, and balance left over 35 include few of the routine capex and few of the fillers of small dia and the land cost which we have also acquired in the last quarter.
Okay. Secondly, looking at the overall demand scenario, what volume growth that we can expect for FY'26-27 with a 2-year view, also like revenue, EBITDA and margin target that we are looking forward?
See, we believe on quantity and other parameters, we believe there should be always a growth of more than 20 to 25% volume CAGR growth.
And so on revenue, EBITDA, and margin profile, do we see improvement because of the
Yeah,
improvement?
there should be growth in EBITDA and PAT and all this stuff. But again, revenue will slightly dependent on the prices which accumulate into it. But that is how so commenting on that is slightly tough, but what we believe the 20-25% will be a CAGR growth in coming 3 years.
And in margin as well, we are doing in range of 18 to 20% currently with new capacities coming in and we ramping up in next couple of years. Can we expect margin expansion with the ramp up as well?
Kunal, definitely we look forward for the margin expansion, but right now we can expect the present margin level because since we are already penetrating the market, we are increasing our market share, or we are creating a new market also, or we had invested on the manpower front also, we had invested good amount. So for at least 3 to 4 quarters, we can expect the same level of margin which we have right now, or we look forward for the better margin. So it will definitely come in the coming year.
And also for the FY'25, if you see on the revenue front, we are lying by 8 to 10%. Then the internal budget, which is primarily due to realization dip of 5% versus March 2024, and also 8 to 10% versus our internal budgets.
Yes, sir. Currently, we are at around 28 to 30,000 ton run rate for FY'25. But as we're expanding from current 38,400 ton to around 45,000 ton by FY'26 end. So at that peak level, like what could be, the maximum potential of revenue, EBITDA, and margin?
See, again, I've already given you the indicative figure between this expansion and all, so you can get a fair idea on that.
Okay. Fair enough, sir. Thank you so much, sir. Yeah.
Thank you. Ladies and gentlemen, due to time constraint, that would be the last question for today, and I now hand the conference over to the management for closing comments. Over to you, sir.
I take this opportunity to thank everyone for joining the call. We will keep updating the investor community on regular basis for incremental updates on your company. I hope we have been able to address all your queries. For any further information, kindly contact SGA, the investor relations advisor for your company. Good evening and thank you once again.
Thank you. On behalf of Ambit Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your line.